This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Now let me briefly take you back to our original and still existing pro forma income tax computation that we saw again at the start of this chapter. What we've just been looking at is the main deduction that you will apply to your income figures for the tax year in deriving this, the bottom line taxable income figure. And that deduction was the personal allowance. And it came away from net income there. And the personal allowance was always an issue. Whether it was available, as you've just seen, is a function of the adjusted net income of the taxpayer. But it's always an issue because without that adjusted net income exceeding the income limit, then again, all UK resident taxpayers, they are going to benefit from the deduction of the otherwise universally available personal allowance. But prior to getting net income, we had total income. And then there were these possible deductions here. Now, these are much less common when it comes to examination questions. If you were to get one of these in an important context, it would be these other trading loss reliefs. Now, I say other because back here, if you recall, if you had a trading loss that had been sustained in an early accounting period, and that therefore went into an earlier tax year, but you had not, by the start of this tax year, been able to utilise all of the available trading loss, then any trading loss relief that was brought forward would be directed and deducted specifically from and only from the trading income assessment of that same trade. What the other loss reliefs are, you don't know. And you're not going to know until you get to Chapter 7, where all will be revealed. But you're going to have to wait for that. But it's sufficient to say that the various other trading loss reliefs that we will see will not be deductions from just trading income, your trading profit of that business, but instead a deduction from total income. So what awaits us in Chapter 7 is a study of if for an accounting period you sustain a trading loss, then what would otherwise as a profit have been assessed in the relevant tax year of assessment will now represent a nil assessment for that tax year. We don't put negative figures into our income tax computation for trading income. It's a nil assessment. And then we separately consider, okay, so what now are the available options for the relief, of that loss? And of those available options, well, which would be the best? And how would we establish what would be the best? That's Chapter 7. The only other one that you're going to see on the face of the income tax computation here is qualifying interest that you pay. Now, we've been talking about interest income, where we have invested in an interest-bearing security or account, and we receive interest income. What we're now talking about is that we borrowed money, and on the money that we borrowed, we're paying interest. And as we mentioned at the time, there are very few examples in terms of real life where taxpayers are able to take advantage of a deduction from their total income in relation to what is qualifying interest. Again, I think we said in our introduction, the reasons why most people borrow, certainly any significant sums anyway, during their lifetime, would be to buy something substantial, like a property in which they live, like their car that they drive. And any loans taken out for those purposes are not qualifying loans. There's no tax relief there. They do not impact upon the tax computation. And what we're now able to see in our next section that we move on to, which hopefully miraculously appears here, Section 5, and it is those deductions from total income, where, as we have just said, the reliefs that are tax deductible here, the only reliefs examinable in the Tax UK exam, are qualifying interest. We'll see the nature of that in a moment's time, and then certain trading loss reliefs. Now, that note there shouldn't actually follow on within that point B. This is relevant to both the deductions for A and B. So these reliefs, whether it's qualifying interest or the loss reliefs, are deducted, as we know, from total income in, of course, deriving the net income. But we don't just run a total column, do we? And therefore, as with the deduction of the personal allowance from net income, the order of set-off is the same. So we firstly reduce non-savings income, before savings income, and finally before dividend income. So the only thing you've got to be able to do is to recognise if you're told about interest that is payable by the individual for a given tax year, what interest was paid in the tax year there, then does that loan represent a qualifying loan? If it does, then the interest paid in the tax year becomes an allowable deduction here from total income in bringing you down to net income. So what are they? They're basically to do with business, to do with work here. A loan to purchase an interest in a partnership or a contribution to the partnership of capital or a loan. So you're borrowing money, paying interest on it. What do you do with the money you borrowed? You invest in a partnership, or indeed you, when we say invest in a partnership, it could be buying out from an existing partner of an existing partnership, their partnership interest, or if it's a new partnership now being formed, it is you investing in that, or bringing in. If you join and become a new partner there in a partnership, you're investing new capital. Or even indeed, if you onward lend the money that you borrowed to that partnership. So you invest in partnership capital, or you onward lend to the partnership. You're putting money into business. Putting money into business is seen as a good thing so far as the economy is concerned, and therefore is rewarded within the taxation system by it being a qualifying interest payment, and therefore it reduces your taxable income. It could be on a loan here, and this is basically the same in two parts. To purchase plant and machinery, to purchase plant and machinery, either used in the business by a partner, so again talking about a partnership there, or if you're an employee, if the plant and machinery is used in the performance of your duties. If you have not had that plant and machinery supplied to you by the employer, but you've had to buy it, and to buy it you borrowed money, and the borrowed money is charged interest, that interest payable is an allowable deduction. So that would be deductible. On a loan here, finally, to a new, your version that you're looking at may be the updated version here, to purchase an interest in, the old version just said a close company. Now that still exists, but it's in advanced tax, not in the Tax UK syllabus. Now, what is now in our Tax UK syllabus is an employee-controlled company. Now, what a close company is, what an employee-controlled company is, we do not need to know. All you've got to recognise is if in a question it says the taxpayer paid £500 interest on a loan taken out to purchase an interest in an employee-controlled company. That's a qualifying loan. The interest paid is an allowable deduction, as we've seen, from total income to give you net income there. The loss reliefs, as I've said, well, again, we can hardly wait, but you're going to have to until we get to Chapter 7. And there, as I'll remind you, the deduction for trading loss reliefs are basically either going to go against the trading income of this period in relation to a brought forward loss, or if we've got a loss this current period, or a loss in a future tax year that comes back to this tax year, what they'll go against is total income. Total income. But again, Chapter 7. Our example, calculate Kathy's income tax liability for 21-22. It's a simple exercise and therefore one that I'm again going to ask you to do on your own here, and then we'll check through it to make sure we've got that. Kathy has a trading profit, so non-savings, £52,000 in our tax year, and paid £1,000 interest on a loan to purchase plant and machinery used in the business of her partnership. Again, we would recognise that as being a qualifying loan, and therefore that interest paid is an allowable deduction from total income. So that 1,000 is a total deduction. There's only one source of income here, it's non-savings. If there'd also been savings income and dividend income or dividend income, then it would still be deducted from non-saving. It's the same order of set-off of deduction as with the personal allowance. So all you need here is a single column working to get your answer. You've got 52,000 non-savings income. You've got qualifying loan interest of 1,000. That'll bring you down to your net income, take away your personal allowance, get your taxable income, and tax that taxable income using the relevant tax rates. Enough said. Now, therefore, over to you. So pause at this point, and then we'll quickly check to make sure that you've got this area sorted. Well, hopefully a quick and easy exercise was example 12 here for Kathy. £52,000 worth of trading income to go into, obviously, your non-savings column, the only column here that you need. Instead of that being your total income, your net income, before the deduction of the personal allowance to give you taxable income, you've got this qualifying interest payment. Again, you had to know that the particular loan and the purpose for which it was made was a qualifying purpose, and therefore you gain tax relief as a deduction from total income, seen there, to derive net income. Once done, you've got your net income, take away your personal allowance, get your taxable income. It's all non-savings, and as ever, your basic rate band limit, which is exceeded by that level of taxable income there. Kathy is a higher rate taxpayer, only just, but is a higher rate taxpayer. So 37,700 at 20%, and the balance of 730 out of your total taxable income of what's that, 38,430 is then taxed at 40% and get your overall tax liability, your bottom line. Again, same tax calculation as before on your taxable income. It's just that you had a deduction from total income for what was a qualifying loan. Returning to your notes now, and we now turn to, well, a rather bigger challenge, I think this may be, in terms of Section 6, and a much more likely issue in the context of your examination as well. Now, we made mention of Section 6 earlier, and that was when dealing with a computation of adjusted net income to determine whether any deduction need to be made in your personal allowance. And I'll come back to that as well at the end of this particular section. But let's understand what's going on here when we deal with payment to charity under the gift aid system, the gift aid scheme, and also because it has the same rules, the computational components are exactly the same when dealing with personal pension contributions. Now, we don't yet know much about pension contributions. I gave you a brief intro in the previous lecture. But we deal with that in Chapter 10. So we'll be focused here on the gift aid system. When we come to Chapter 10, we'll explain how you deal with both their personal pension contributions, another one that we mentioned when discussing it last time, and that was occupational pension scheme contributions. All we've got to know here, that if we are given a figure of a gift aid payment or a personal pension contribution payment, it is exactly the same taxation treatment. We do the same. Now, often in tax, students ask, why? Why do we do that? In which case I always have to tell you, and I think I mentioned this in our introductory lectures together, dealing with tax is not a question of asking why we do it. We do it because it is a rule. It is a rule that was set by Her Majesty's Revenue and Customs. They're people behind HMRC, and from time to time, each tax year, each Finance Act, different people, different charters of the Exchequer decide to change things or keep them the same. But these are rules as laid down. Another person, you for example, might come up with a different rule, but you're not the Chancellor of the Exchequer. So these rules need to be learnt and they need to be applied. So stop beating yourself up about, well, why do we do that? It's simple. We do it because that's the way that you do it. It is the way that has been set in law. So don't ask why, just learn what to do and then do it in the examination room, is my very best advice. So, the gift aid system, what is it? It's a tax-efficient way by which to give money to charity and is available to individual taxpayers. And also, as we'll deal here with basic rate taxpayers to begin with, which is the vast majority, of course, of UK taxpayers, what we'll see is the way in which it simplifies the way that a taxpayer will get tax relief in terms of contributions made to a charity through the gift aid scheme. It's this tax-efficient way of giving. It also, in the context of the way in which we apply the rules, simplifies things from an administrative point of view. With the old system, the way that it was, taxpayers had a lot of trouble completing tax returns. Taxpayers who needn't otherwise had to have completed a tax return would have to do so in order to get the tax relief on it. This simplifies things, as we will see. But bottom line, learn the rules and apply those rules. So let's see what we've got. You decided that you want to make a gift to charity. Fine. Now, under the gift aid scheme, any payments, any gifts you put into charity under the gift aid scheme are treated as being paid net of basic rate tax of 20%. Now, for this to happen, you do have to be a basic rate taxpayer. If you are not even a basic rate taxpayer, you do not have taxable income, then you won't be able to use the gift aid scheme. You must have at least sufficient taxable income equal to the amount of the contribution to charity that you're making. So you have to be a basic rate taxpayer. And that will be at least the case in terms of any exam question that you get. For a basic rate taxpayer, tax relief at the basic rate is automatically obtained as payments are made to the charity net of basic rate relief. Now, you know what the basic rate of tax is, it's 20%. And that relief is being given at source, i.e., to explain this, you want your favourite charity to benefit by £100. So, the taxpayer need only make a gift aid payment of £80. Now, that gift aid payment that you're making is coming out of your taxed income. These gift aid payments and also the personal pension contributions do not represent deductions from your income in deriving the taxable income. This is not like what we did with qualifying loan interest, where we would have declared that amount of interest payable, would have shown it as a deduction in deriving our taxable income, and then taxed the remaining, the taxable income figure through the various rates of tax, here at the moment a basic rate of 20%. What we have here is the situation where the amount of contribution you make, your gift to charity, does not serve to reduce your taxable income at all. So you wanted to give your favourite charity the benefit of £100. So you only physically have to pay over, put the cash through, put your credit card through to pay £80 to the charity. And what that then means is because you are a basic rate taxpayer, you would have suffered basic rate tax on the income that you received that has gone through your income tax computation to leave you with net income of £80 in your pocket. Now, to leave us with net income of £80, having suffered 20% tax on our gross income, we'd have had gross income of £100. We'd have paid tax at 20%, so we're now left with £80 in our pocket, and we've transferred that across to the charity. So what the charity gets is not just your £80, but the charity, with your gift aid payment, can then notify HMRC of the gift aid payment that you, a basic rate taxpayer, have given to them. £80. HMRC know that you are a basic rate taxpayer, and they therefore will take the £20 tax that they took out of your gross income and pay that over to the charity. So you end up spending £80 and the charity gets £80 plus the £20 tax taken from you by HMRC, which HMRC then pass over to the charity. So that said, how do we then deal with this in terms of your income tax computation? We've had our basic rate relief at source. We've paid over £80 out of our net income, and the charity is benefited by £100. What that means as a basic rate taxpayer is there's nothing to do on the income tax computation. You just show what was your income figure without any deduction of the gift aid payment. They are not deducted from your income figures on the computation. You make your payment, the charity gets £100, your £80 plus 20 of your tax taken by HMRC, handed back over to the charity. It's cost you 80 and the charity's got £100. So as we see here, the taxpayer need only make the gift aid payment of 80. The charity will then be able to claim back from HMRC the basic rate of £20 thereon collected by HMRC. You're a basic rate taxpayer. You had £100 of income. They've taken basic rate tax £20 off that, but then you've given the net £80 to charity. So HMRC hand over your £20 tax that you had paid to them. Nice system. Base rate from the taxpayer's income. Therefore, the donation is not shown as a deduction in the calculation of taxable income. Now, again, I have to stress this because, again, a common error made is students go and show gift aid payments or indeed personal pension contributions as deductions from total income. They are not. You don't need to reduce the total income because you've already had your basic rate relief at source by paying over a net £80 instead of a gross £100. Now that's how it works. What have you got to do in terms of dealing with this issue in your exam question? Well, as I say, in relation to if you're only a basic rate taxpayer, then there isn't anything else to do. A question may tell you what is the amount paid by the taxpayer, for example, £80. You must gross this up to compute the gross figure, or instead may state amount paid £100 gross and give the already grossed up figure for you to use. Read the information in the question carefully. Shouldn't we always there? But on your income tax computation, there's nothing for you to do if you are just a basic rate taxpayer. Now, the chances are, in an exam question, you're not going to be dealing with just a basic rate taxpayer, because literally there would be nothing for you to do on the face of your income tax computation. It would already have been done with the basic rate relief given at source, and then HMRC handing over your £20 to your favourite charity. But we are going to have to understand the difference between your net payment of 80 and what the gross amount of that payment would be, the 80 plus the £20 tax, i.e. £100. Because there is something to do within your income tax computation if you are higher rate or if you are additional rate taxpayer. Anything above basic rate, there's an extra exercise to perform. Now again, I said to you, don't worry about why. I'll briefly explain how this system has worked and how it's exactly the same as if you treated the £100 or a £100 gift to charity as you do qualifying loan interest for a basic rate taxpayer. You don't need to listen to this, but so I don't get any more questions on the Ask the Tutor about this particular issue, and hopefully it will make life easier for you. Again, if you want to listen to the next bit. Okay. Now then, if we didn't have the tax system that we have, which is a simpler system for the basic rate taxpayer, what would have happened, we'd have had £100 paid, because that's what you wanted your favourite charity to benefit by, treated as an allowable deduction from income on your income tax computation. So the gift to charity would be £100. You show £100 deduction from your total income that would have been taxed at basic rate tax at 20%. So you've saved 20% tax. So you pay out 100, your tax goes down by 20. Guess what? Your net cost is £80. But that would have demanded including that information on your tax return. And all those basic rate tax payers would have to, because again, it might not just be one particular gift to charity, would have to record all those amounts, have proof of those figures, and then put it all onto their computation. It doesn't have to happen. We as basic rate taxpayers can make contributions, gifts to any of our charities. We pay over a net amount. The charity discloses that information to HMRC, to the government, and they get the basic rate tax back from them. So what we just said is, you've paid over to the charity £80. End of story. Your net cost is £80, and the gift to charity is still £100. Your £80 plus the £20 back from HMRC. And all of that without any admin to do. It is a much easier system. And the vast majority of taxpayers are basic rate taxpayers. But that means it would be way too easy to deal with on an income tax computation, because there wouldn't be anything to deal with. You just ignore it. You put a statement, of course, if it was a written question, to say, taxpayer is a basic rate taxpayer, basic rate tax relief given at source on the gift aid payment. Job done. So what's going to happen is that we are going to be dealing with, more likely here, a higher rate taxpayer. Now, a higher rate taxpayer, of course, should be paying tax at 40%. And if therefore we applied the rules as we have it in terms of qualifying loan interest payments, income would have reduced by 100. Income that would have paid tax at 40% on, so we get a 40% saving instead of a 20% saving, so our net cost to the higher rate taxpayer would become £60 in order to give the charity the gross £100. Now, we've just seen that our net payment to the charity was £80 under this gift aid scheme. So we still need, through this scheme, to get higher rate relief. So what do we have to learn? So again, simple. If you're a basic rate taxpayer, then we don't do anything on the income tax computation. If you're a higher rate taxpayer, now we need to know what the gross amount of the gift aid payment was. Read the question carefully, therefore. Did we get given in the question what they say is the actual amount paid under the gift aid scheme to the charity? That is the net. That's my £80 in our continuing example. Or sometimes, just to make life easier for you, not to trick you, but to make life easier for you, it's one less calculation to do. They tell you, made a gross gift aid payment of £100. Job done. But we would need to identify what that gross figure was. Now remember, at the moment, you've only received basic rate relief at source. So you paid £80. The charity got the £20 basic rate tax back from HMRC. The charity gets £100. Their position hasn't changed. But at the moment, your net cost is still £80, not £60, which would have been your net cost if you had been a higher rate taxpayer and you had shown the £100 as a deduction from income, removing income of 100 that would have been taxed at 40%. Your net cost would have been 60. So how do we get that higher rate relief? Right. For higher rate taxpayers, 40% tax relief is given as follows. Now the 20%, as we've said, again given at source. And effectively 20% to the income tax computation. Now again, don't worry about 20% here, 20% there. Learn the next thing. the only thing that you have to do here, the involvement on the income tax computation. And that is, we extend the basic rate band by the gross donation, so that more income is taxed at 20% and less at 40%. So if, therefore, I've made my net £80 gift to charity, I gross it for the basic rate of tax. 80 times 100 over 80 is £100. I now have £100 extension to my basic rate band. My basic rate band limit is usually £37,700. That now is going to be increased by £100. Now, I haven't changed my taxable income in any way. Taxable income is exactly as was, because there's been no inclusion of the gift aid payment on the face of the income tax computation. So, I've had my basic rate relief by paying 80, charity got 100. Now I get my higher rate tax relief by increasing, extending, as is the expression, the basic rate band limit. And what that means is I tax the first £800, rather than the first £700 at 20%. I am moving £100 of my income that would have been in the higher rate band back into the basic rate band, therefore charging at 20 instead of 40%. That's the gross amount of the gift aid payment that has extended that basic rate band by. So there's your other £20 worth of tax saving. So effectively, if I take you back to, not that I like to give explanations, but you would want, if you're a higher rate taxpayer, you would make your, if it's treated as allowable deduction, you'd have £100. The tax would be saved at 40%. You're a higher rate taxpayer. There's £40 there, and that would mean that your net cost is £60. What has happened through our tax system is you've paid £80, getting your basic rate tax relief at source, and then what you're going to do, you're going to tax £100, the gross amount of the gift aid payment, at what would be 20% instead of 40%. You've moved £100 of income out of higher rate and back down into basic rate. So 100 taxed at 20%, £20, compared to what would have been £100 taxed at 40% had it been in the higher rate band, is £20. That tax saving there, that's the tax saving that you've achieved, brings you down to a £60 net cost. Exactly the same. Now then, don't worry about proving it, because you'll never have to. All you have to do is what it says here, which is to extend your basic rate band limit of 37,700 by whatever the gross amount of the gift aid payment came to. Again, how do you get that gross gift aid payment? In either of two ways. Either the question actually tells you that paid this amount, in brackets, gross. That's the gross equivalent of what was actually paid. Or they don't use the word gross, they simply say what was actually paid. In my example, they could have said, actually paid £80 under the gift aid scheme to whatever charity. Or they could have said, made gross gift aid payments in the tax year of £100. Either way, the gross figure is £100. And what you do with that gross figure, you extend the basic rate band limit. There's one exercise to do here to get it right. You extend the basic rate band limit by the gross amount of the gift aid payment. You don't have to, again, worry about understanding why. The fact that it would still give you the same result as if you'd done it in the allowable deduction method, like qualifying loan interest. We don't do that. This is the way that we do it. So it's a very simple system. All you do, if you're a higher rate taxpayer, take the gross amount of the gift aid payment and extend your basic rate band limit by that amount. As a separate issue that may be something the taxpayer wishes to do, the taxpayer can elect to treat gift aid payments made by the 31st of January within the tax year. So for us, 21-22, by the 31st of January 22, to have been made in the previous tax year, i.e. a payment made by the 31st of January, that should be 22 there, can be treated, so one of those automatic updates is added a year to everything, which I haven't picked up on. A payment made by the 31st of January 22 can be treated, oh no, I tell a lie, treated as paid in the tax year, so it wasn't actually paid. If it was paid in the 22-23 tax year by the 31st of January 23, the 31st of January in the tax year, it can be treated as if it was paid in the previous tax year. That's 22-23. We can instead treat it as being paid in 21-22. Sorry, I should have read the rest of that before saying it was wrong. So you paid it in 22-23 tax year. You paid it by the 31st of January 23, and that would allow you, if you choose so to elect, to treat it as if it had been paid within the 21-22 tax year. It begs the question, why would you do that? The reason why. This would be advantageous if the taxpayer was likely to be a basic rate taxpayer in 22-23, but was a higher rate taxpayer in 21-22. Clearly, you would wish to get higher rate tax relief rather than just basic rate tax relief. What that would mean is that if you wanted your favourite charity, again to benefit by £100, the net cost to you as a higher rate taxpayer, given that you get the higher rate tax relief, would be £40. As a basic rate taxpayer, your net cost would still be £80. So better to get higher rate tax relief. So if in the current tax year you think you're going to be a basic rate taxpayer, obviously you've got to make this decision before the end of the tax year, but last year you were a higher rate taxpayer, then make the election and backdate it to the preceding tax year. In that way, you get higher rate rather than just basic rate relief. This would also be advisable if in 21-22 the taxpayer had adjusted net income between 100,000 and 125,140 and was therefore suffering a loss of their personal allowance, as we saw in section 4 of this chapter. See section 4 on page 10 that both gross gift aid payments and personal pension contributions are deducted in arriving at the adjusted net income figure. Why did we need to know adjusted net income? If it exceeded £100,000, there would be a restriction of the personal allowance. That's where we came across this issue before. And that's another reason, therefore, why you might want to backdate it. So, this would be advisable if in 21-22, the taxpayer had adjusted net income between 100,000 and 125,140, and therefore was suffering a reduction in their personal allowance, and was therefore suffering a loss of their personal allowance, as seen in section 4 of the chapter. If you're not going to have that problem in 22-23, then you can treat the payment as having been made back in the year where you had that higher income figure in order to reduce down your adjusted net income. If this year, 22-23, you don't have income in excess of £100,000, then the adjusted net income is a meaningless figure. Last year, it's costing you. You're having your personal allowance reduced. You don't want your personal allowance reduced. So as a planning point of view, better to take it back and treat it as having been paid in the previous tax year. So again, some planning points there for you. We've seen how to get basic rate tax relief at source. You pay £80, the charity gets £100. If it turns out that you're a higher rate taxpayer, you pay £80, the charity gets their £100, and you get to reduce your tax by extending the basic rate band by the gross amount of the gift aid payment. The gross amount was 100. The basic rate band limit goes from 37.7 to 38.7. And that's all we have to do. What about if you're an additional rate taxpayer? Well, again, you got your basic rate tax relief at source, the 20%, but you're now an additional rate taxpayer, so you're paying, therefore, 45% tax. So what about that 25% differential? 25% through the income tax computation by, when you were just a higher rate taxpayer, you merely extended the basic rate band by the gross amount of the gift aid payment, i.e. the £100 in our example. But now if you're an additional rate taxpayer, you've got above the higher rate band. So what do? We also extend the higher rate band limit of £150,000 by, as it always is, the gross donation, the gross gift aid payment. What does it do? Again, it's pushing income that would have been in the higher rate back into basic rate, and by extending the higher rate band limit of £150, it's taking the £100 of your income that would have been taxed at 45 and instead taxing it at 40%, and therefore getting the additional rate tax saving. As we said, the same treatment as gift aid payments were also applied to payments made by individuals into their personal pension schemes. There's a lot more detail about pension schemes and pension contributions in Chapter 10, but suffice it at this stage that if you were to see personal pension contributions paid or gift aid payments made, the tax treatment is exactly the same, whether you're basic rate, whether you're higher rate, whether you're additional rate taxpayer. So what we've got to do now is to prove that in terms of our exercises here. Firstly, example 13. Elliot has a trading profit, so non-savings income, of £53,000 in 21-22. He paid £1,600 to charity under the gift aid scheme. That's the actual amount paid. We need to know what the gross amount of that gift aid payment is. So 1,600 times 100 over 80 to establish what the basic rate tax thereon would have been. That's £2,000. That is your gross gift aid payment. Now we only need to know that gross figure if you're a higher rate taxpayer. And as we said, if you're only a basic rate taxpayer, then the £1,600 that you've paid has left you in the correct position of the charity getting what they wanted and or what you wanted them to get, and you getting the basic rate tax saving. So it's bound to be, in any exam question you get, a situation of you are dealing with a higher rate taxpayer or even up to additional rate. Well, you've got to discover that here, but with that figure of 53 and that deduction of 2,000, yes, you are going to be dealing with a higher rate taxpayer. So what do? Income tax computation, £53,000 worth of non-savings income. That 2,000 gross, 1,600 net does not touch the income tax computation. It is not an allowable deduction. So your non-savings income is 53. Your total income is 53. We take away your personal allowance there. We know what that is. You get taxable income. But when you tax that taxable income, you will not use a basic rate band limit, as it is and always has been until this point in time, of 37,700. You will extend that by the gross amount of the gift aid payment. And that, therefore, will take it to £39,700, i.e. taking up to the maximum of 2,000 there out of the higher rate band and putting it back into the basic rate band, giving you your higher rate tax relief. Okay, over to you, therefore. Have a go at that little exercise, and then I'll quickly go through it before we move to, again, more expansive examples. Over to you. Okay, let's see how we've dealt with Elliot, therefore. We've only got non-savings income. We know it's the trading income figure, and that is £53,000. There is no other source of income, and although indeed we do have the gift aid payment, an actual payment of £1,600, which of course was then times by 100 over 80 to give a gross figure of 2,000. That 2,000 gross gift aid payment does not impact on your figure of total income, nor indeed net income there. There's no deduction of it. Instead, as we've said, basic rate tax relief is given at source, and higher rate tax relief, as will be relevant here, and is likely to be in any exam question you do. Higher rate tax relief is achieved by extension of the basic rate band limit. So we've got total income, which is also the net income figure, of £53,000. That means that the full personal allowance of £12,570 will be available. Remember, if adjusted net income, as it is known, exceeds £100,000 income limit, then we see a restriction of that personal allowance. No such here. So that brought us down to taxable income of £40,430. And then, where the relevance of the fact that there was a gift aid payment comes into play as regards not the calculation of taxable income, but in the calculation of the tax liability. And that is that your basic rate band limit, given at 37.7, which it always is, but is extended by the gross amount of that gift aid payment. That was 2,000, and that, as we agreed before you did this, was 39.7. And then, what have we got? 39,700 instead of 37.7 at 20%. Out of your 40,430 leaves just £730 worth of the taxable income to be taxed at higher rate. Look at what that 2,000 has done. It's taken £2,000 of your income, your taxable income, that would otherwise have been taxed at 40% and put it back into the basic rate band and tax it therefore at 20%. So that's all we've got to do to calculate the income tax liability. Going back to your notes again now, and example 13, as you've just done, is followed inexorably by example 14. Right, what have we got? Calculate again Thomas's income tax liability for our tax year. Thomas earned £160,000 of trading profit in the 21-22 tax year. Trading profit, non-savings income. No other sources of income given, but told that in the tax year, paid, that therefore is the actual payment, the net figure, 6,400. So 6,400 times 100 over 80 will give you your gross gift aid payment, and that will be £8,000. So to begin with, it's just like we did a moment ago. You've got your trading income in your only analysis column, non-savings, and that's £160,000. But 160 is more than another number that is very important in the context of, do you now get to deduct the full personal allowance from what is your total income, what is your net income figure? And that should come back to you as the answer, no, you don't. Now be careful. I've said that figure, £160,000, is a figure that is substantially bigger than the limit relevant for getting your full personal allowance, or indeed any personal allowance. What we have, though, is that adjusted net income equals your net income minus, and it's minus, of course, here, the gross gift aid payment of £8,000. Now that will still be 160 minus 8 is £152,000. Now 152, remember in the context of your personal allowance, as on your rates and allowances page given to you in the exam, If your adjusted net income exceeds £125,140, there will be no personal allowance. And that is clearly the case here. There's no personal allowance. What it also means, of course, because you've got an £8,000 gift aid payment, is that given that your taxable income is going to be your trading income of 160 less personal allowance 0, that has been reduced to nil because your adjusted net income at £152,000, that was more than 125,140. Now again, be careful about the different purposes that we use the gross gift aid payment for. This is in calculating adjusted net income, which is to determine whether or not we get any personal allowance. If the adjusted net income exceeds 125,140, which it does here, there is no personal allowance. If it exceeded 100,000 but not 125,140, then you would restrict your personal allowance in the way that we saw in our previous lecture together. The tax calculation, therefore, we are again with taxable income of 160, we are not just a higher rate taxpayer, we are an additional rate taxpayer. Or would be, maybe still will be, depending upon what the basic rate band and higher rate band limits are. And remember, what do you have to do with those base band limits? There's your gross gift aid payment, £8,000. You extend both the basic rate band and higher rate band limits by those figures. Okay, over to you therefore. Trading income 160, that is your total income. It's also your net income, and it's also your taxable income because there is no personal allowance. But in taxing that taxable income, you don't use 37.7 and 150,000 respectively as your band limits. Instead, you revise them by extending those limits by the gross gift aid payment. Over to you, have a quick go at that, do your tax calculations, check it out with the answer in the back, switch us back on again, and I'll quickly talk you through that before we progress any further. Well, let's now review through that answer together. Now, as we know, the existence of a gift aid payment or a personal pension contribution does not impact at all on your total income, nor indeed taxable income figure. What does happen here, however, because that trading income is 160,000, we have to establish our adjusted net income, which we did here in working 1, where we took the net income of 160 and reduced it by the gross gift aid payment. There's the 152,000 we computed. Well in excess of 125,140, the personal allowance is reduced as the adjusted net income exceeds 125,140. Again, reduced to nil there, I should say, as we've gone above 125,140. So no personal allowance to come in here. Taxable income is also 160. It's all non-savings. Now, because, well, not only do we believe we are basic rate, but we're also higher rate and potentially additional rate taxpayer, we now, before we do our tax calculation, have to revise our basic rate band limit and higher rate band limit by increasing them by the gross amount of the gift aid payment. The gross amount of the gift aid payment. That was 8,000, so the revised basic rate band limit is 45.7. The revised higher rate band limit, 158. You've extended both by the same amount, so the difference between your higher rate band limit and your basic rate band limit will remain the same at £112,300. Reason why we bothered to compute that, as the higher rate band limit is 158 and we have taxable income of £160,000 here, then we will just be an additional rate taxpayer. So what have we got? It's all non-saving, so the basic rate band limit as it now is 45,700 at 20%. Then the higher rate band between the basic rate band limit and the higher rate band limit, the higher rate band is that 112,300 at 40%. That's taken you up to 158,000, leaving just 2,000 more pushed into the additional rate, and that's 45% tax thereon. But by having a higher rate band limit of 158 instead of the usual 150, it has meant that, of course, we've taken income, some £8,000 of income that would otherwise have been taxed at 45, and taxed it instead at 40%. There. Okay, put the tax figures together, get your income tax liability, job done, and marks earned, we trust. Very quickly, back we go to your study notes, where you've then got example 15. Last example on this particular issue, and that is, again, income tax liability for 21-22. It's just that we put more into this example. So it's a bigger and better example for you to have a go at. So let's see what we've got. Trading profit, non-savings, 98,000 in 21-22. Bank interest, so savings income, 4,000. Dividend income, so yes, dividend. So we've got the whole range. We've got non-savings, savings and dividend income, and that's £6,000. She paid interest of 3,000 on a loan to contribute capital into a partnership of which she is a partner. Loan interest paid. Does that represent qualifying loan interest? If you can't remember, go back to your note on that from earlier and make sure that you identify what this is. If it is a qualifying loan interest payment, he says suggestively, then you've got a £3,000 deduction from total income to bring you down to net income. It's then a question of establishing, of course, the available personal allowance. For the personal allowance, you need adjusted net income. What is it? It's the net income less than any gross gift aid payments or indeed personal pension contributions. And the last bit is, she made a payment of £4,800 to a charity under the gift aid scheme. So 4,800 times 100 over 80 will give you that gross figure. Get your adjusted net income, work out the available personal allowance. Once you've got your personal allowance, take it away, get your taxable income, but then before you tax that taxable income, given that you know there is a gross gift aid payment involved here, then extend the relevant basic rate band limit, and were it necessary, it won't be necessary here, but extend here the basic rate band limit. Again, you won't have to extend the higher rate band limit. So once again, have a go at that one, please. Do use your structured format just for purposes of practice, and we'll see how we fared when we review that in a few minutes' time. Pause again now, please. Okay, so we have our trading income, non-savings, 98,000. Bank interest, savings income, 4,000. Dividends, obviously dividend income there, 6,000. As across, we've got total income of hopefully £108,000. Total income, but to get to net income, then we deduct any qualifying loan interest payments, and the one that we have here contributing towards putting into a partnership of which you're a partner, that therefore was a qualifying loan interest payment. We reduce not just your total, but in order, firstly, non-savings income. Any of the deductions, be it personal allowance, as we'll see in a moment, or in terms of qualifying interest, any such deductions that we have, we will be taking here and deducting them firstly from non-savings income. But that then means we need to work out the available personal allowance. Now we can see that we've got a total income figure of 108 and a net income figure of 105. So that net income at the moment does exceed 100,000 income limit, and therefore if nothing else had happened here, there would be a reduction in the personal allowance. But remember what the calculation is in relation to adjusted net income. It is your net income, 105,000, less the gross gift aid payment. That, as we knew, was 48 times 100 over 80. That is £6,000. And, ooh, look, We have adjusted net income of 99,000. So we just squeeze in there under the income limit. So yes, we will benefit from the full personal allowance of 12,570. Take it away, get your taxable income for each of your categories of income, in total 92,430. But before we start to tax, given that we know the level of taxable income puts us into the higher rate band, we have to establish, of course, what the extended basic rate band limit is. That's 37,700 plus 6,000 is 43,700. Now again, we're not interested in the extended higher rate band limit. I've shown it as that's how you'd compute it there, but it's unnecessary here because we're not an additional rate taxpayer. We do not exceed the higher rate band limit. So with our taxable income of 92,430, we tax the non-savings first of all, and the basic rate band limit, as we've said, has gone up by 6,000 to 43,700. So that's at 20%. We've got £82,430 worth of savings income, of non-savings income. So 82,430 was the non-savings. We had 43,700 in the basic rate band. 82,430 minus 43,700, all being well, is the 38,730. That would take us up to the 82,430 there of taxable non-savings income. And that will be at 40%. We then move on to the savings income, 4,000. We're a higher rate taxpayer. Therefore, as a higher rate, not an additional rate taxpayer, we get a 500 savings income nil rate band, to be taxed, of course, at the nil rate. That means that only 3,500 is in the higher rate at 40%, and therefore the 3,500 will be taxed at 40. The dividend income, it doesn't matter what band of income, taxable income that is in, there's always 2,000 at 0%, the dividend income nil rate band, but it does mean that 4,000 does fall in the higher rate, and that higher rate is 32.5%. Lots of figures of tax to compute there to bring you to hopefully your income tax liability that appears here to be 26,932. Again, note there about the savings income that exists and what is available against it, and about the dividend income, as well as the calculations of the adjusted net income, as we've seen, for purposes of determining the level of personal allowance available, and also the extension of the only one necessary here, the basic rate band limit. Okay. Now, again, a lot of students have problems with dealing with the gift aid payments and with dealing then with the personal pension contributions. But let's just summarise this in terms of what you actually need to know and to do in an exam question, because then it's incredibly easy. If you were only a basic rate taxpayer, and I've got to think, well, you wouldn't be, because if you were only a basic rate taxpayer, you ignore the payments made. They do not impact on the tax computation, not in terms of income, not in terms of the tax calculation itself. So just ignore it. It's irrelevant. If, as is more likely, you're a higher rate or the only other one, additional rate taxpayer, what do? If you're a higher rate taxpayer, then you extend that basic rate band limit by the gross gift aid payment made in the tax year. Extend the basic rate band limit. Now that's simple enough. All you've got to make sure of is you pick up the gross figure. Do they simply say this is the actual amount paid, full stop, actual payment equals net? Or do they actually tell you that and use the word gross? This is the gross gift aid payment, in which case that is the figure that you simply use there. No grossing for you to do. They've already given you the figure by which you extend the basic rate band limit. If you have gone up into additional rate, well, you've then got to extend both the basic rate band limit and the higher rate band limit by, again, the gross gift aid payment. Now that is a whole lot shorter than your study note. I've had to go through that to explain what you're doing. I even bothered, I don't know whether I should have done now, to explain why we do it, and the net effect is exactly the same. But it's a simpler system of dealing with those gift aid payments. That is the system we have, and it merely requires you to do that, which isn't very difficult. Do remember along the way, of course, that if you have figures of gift aid and or personal pension contributions, then you've got to think about your personal allowance, because they are deductions. The gross amount of those payments are deductions in deriving, as we've seen, the adjusted net income figure for determining whether or not you get any or a reduced personal allowance or the full personal allowance. Okay, that at last therefore brings this particular session to a well-deserved end.